Hey traders. Okay, so looking at the chart now, it's a bit of an update in the market, show you what's happening and what's going on in the market right now. And what we're looking at now is we're looking at, let me just squeeze this up here so we can show you what's going here. We're looking at a weekly chart here, okay? Looking at a weekly chart of the S&P 500. But what I want to do is I want to bring it right out to a monthly chart first. And there we go, bring it out to a monthly chart. Let me move this over here. So, and as we can see here on a monthly chart, we see here that we have this market made a high, ran down, made a low, ran down, ran up, made a double top, now made a lower low, and it looks like it's now creating what we call, looks like we're creating a major lower peak here. So that's actually very, very dangerous with that, because the market looks like it's coming down. The market looks like it's getting very weak here at the moment. So when we're looking at this particular chart here, let me just open this up here and I want to show you something. If you look at the 2008, this is the 2008, this is 2011. Let me just remove these off the chart now. And let me screw this up a little bit more. I'll show you what I'm looking at here. And if we have a look at this here, if we look at the actual, if we have a look at this here, you can see how the market came down. It ran up, hit this area of a this resistance line, and this is in 2008. Okay, market ran down, bounced off, ran back up, bounced off once, bounced off twice, and then ran up, and then ran down, broke straight through, and then ran back up, hit resistance, and then ran back down. And that's exactly what we're getting here in 2011, right? This is 08. Okay, and this is 2011. So moving forward there, we can see that's exactly what's happening there as well. Okay, so as we can see the market ran up, hit the resistance, came back down, ran back up, bounced off once, bounced off twice, and then what happened, it broke straight through, and now we're running back up to this area of resistance. So you can see it's almost identical on the actual time frame itself. But what I do say is what I'm definitely keeping an eye out for is looking at a monthly chart here, and I'm really keeping an eye out for if this is going to make a major peak here. Now why I say that is this: if we do start to create a head and shoulder formation, let me show you what I mean here. You can see over here we had a little sort of, let me get the correct drawing tool here. You see we had a little left shoulder here. This was the big head through here, and we created the right shoulder through here, right? That head and shoulder formation was the one that brought it back down. If we look over here, we have, this is a really big left shoulder. This could be the head, you know, and this here could be the right shoulder here forming right now. If that is what I think it is, and it does form, and we start to get a bit of a roll, a bit of reversal here, and start to come back down, then it looks like the market's likely to start heading way back down here. And to the downside. Now we're looking at this moving average here. You can see this moving average here is clearly been a major support through here and all through here. This is the 200 moving average on the actual monthly chart as well. Okay, looking at the monthly chart, you can see it goes all through there, and we've basically been above that for quite some time. A bit below it in the 2008 stock market crash, but then it came back up, bounced off it, now come back up, bounced off again. So if we do get a break below that, okay, if we have a look at this here, we do get a break, this little level here, you can see, if we get a break below this level here on a monthly chart, then we are likely to get on a drop all the way down to probably the lows through here, and I would say probably even a bit further with that. So that's looking at the bigger picture there as well. Okay, so moving forward now on the daily chart, we can see that what we're looking here on the daily chart is we're seeing that the overall market has come up, hit this area of resistance where we are right now. Okay, this whole area here is you see from this whole area here is a resistance point, and you can see it from resistance there, the support, a couple of support lines through there, and also big resistance through there, and also we have the 200 moving average going through as well. So that's looking very weak. And on top of that, look what we have here. If you've been following me on YouTube, you know what this pattern is called. This is actually called a stop and reverse pattern. You can see this area through here where the market broke back up, and now it's just going sideways, and it looks like it's going to slightly slow. It looks like it's trying to slightly slowly and surely break to the downside. And on top of that, if we have an even closer look at it, let me zoom this right in now, okay, and if we have a closer look at that, let me bring this into here, so there we go. If we have a closer look at this, it actually looks like it's trying to form what we call an upright head and shoulder. You can see the market has a left shoulder here, bit of a head there. You can see like a bit of a right shoulder forming there as well too. Okay, so if that is that, and we can see the market is going from here, and the market is sort of supporting that line through there. If the market is here and it does start to break down and start to break below this sort of major support line through here, around the sort of the 1220, we start to get down and start to get a bit of momentum, then I can't see why we wouldn't get a big drop to the downside. Now, by looking at this, one thing I do say is the last thing I do say that's going to support this market is the Fibonacci level. I'm huge into Fibonacci's, and I believe they're a good thing. Okay, so our 50 to 62% is these two lines over here. Okay, it's this line from here to here. These are the what we call the 50 to 62% level. So if the market does break this overall sort of 1220 level, if it does start to break down through there, then the market's likely to come down through here. If it does bounce off and create a move to the high side, then this is just a continuation to moving high side. But what I'm seeing here is it looks like the market might be breaking down. It looks like the market might be seeing a lot more downside to come. Okay, so if this sort of last sort of stop in the war sort of thing is 1660, if that doesn't happen, if that doesn't stop, then we're likely to go down towards these lows, and a lot more should come. So keep an eye out for that. I hope this helps you out. This is a bit of a wrap up on what's happening in the S&P market, and I'll see you very, very shortly.